Earnings and results from growth names like Tesla start pouring in next week. Joining us now is EMJ Capital Founder Eric Jackson. Eric, good to have you on. You know, you may have just heard our conversation about rising rates as it pertains to banks and debt. Rising rates may not matter to Apple, but my guess is they probably matter to two stocks you like, a Tesla and a Rivian, because unless you're paying cash, you're borrowing money. What's your take on the rate-tech relationship?
Hi, Brian. Good to be here. It matters, but it doesn't matter as much as it did back in 2021 and 2022 when we were first getting off the drug of free money. So, rates are up about, the 10-year yield is up about 34% over the last 6 months. The NASDAQ's up 10% over that time period. So I think a lot of the pain of adjusting to higher rates happened in 2021 and 2022. And even in the last 3 months, when rates have been really sharply accelerating, the NASDAQ has been, roughly flat or down a bit. So it matters, but I think a lot of tech has taken its medicine in terms of the correction in the prices. So I think investors are looking ahead.
There was news today that Tesla's share of the EV market was, I think, the lowest it's ever been. But I don't think that's surprising given the fact that everybody now has an EV. I mean, every manufacturer produces one, is my point. So the competition is more out there. Are you looking more at market share? Are you looking at margins? Some investors have been frustrated with these Tesla price cuts. They're trying to grab market share, but some investors like Gary Black are like, hey, you're probably leaving $1 billion in revenue on the table.
Well, I think it speaks to their position of strength and the fact that they've been at this for 15 years and just what a lead that is compared to all the startups that are trying to, make money from EVs, and of course the big three, dealing with their strike and how that's going to increase their costs. So I think, Tesla, forest for the trees here is that this is the EV gorilla that makes money and will make money for a long time. And so we can fret and the bears can, say that the gross margins are going down or something, but think about this stock. This has taken so much bad news this year. There have been supposed delivery misses. Gross margins have been lower than they have been for a long time. And the bad economy hanging over everybody and the rise in rates. And yet this stock is up 107% for the year. And I think a lot of the bad news about price cuts is behind them. So I'm watching next Wednesday to see what the gross margins will be. I'm optimistic that they're going to hold to their word, that it's going to stay way ahead of the big three automakers with their ICE technology. Mm-hmm. And that's going to be something that the market embraces.
Yeah, and the UAW strike, which we have covered extensively on last call, 7 p.m. Eastern. Tune in, by the way, Eric. Will that have an impact at all, positively, negatively, on Rivian?
Yeah, Rivian has been kind of forgotten about, but take a step back. They're actually doing second best, I would say, after Tesla in the EV space. And a lot of people got upset with them because they did $1 billion convertible debt offering a week ago. The stock went from 23 to 19. But again, looking at the big picture, they're going to do 52,000 deliveries this year. So basically, they are Tesla back in 2015. And yet the funny thing about it is that at $18 billion market cap, they traded about half of the market cap that Tesla did back then. And that's before, we dealt with the whole pandemic and Tesla really took off and went on steroids. So I don't think Rivian is aggressively priced here. It's always good to raise cash. There are more and more of these SUVs on the roads and the trucks.
But Eric, and I'm very, I'll just say this, I'm very familiar with the R1S. I'll just leave it at that. They're losing money on every car. I mean, $30,000. That's a lot of money.
How much? But they are moving in the right direction, Brian, I would argue. I'd say they're losing less money than they used to. Fair. And they're on the trajectory where they're going to start making money on every car starting next year. And that's what they've guided to. And I think what Wall Street and what the Tesla story shows is that investors, when they see that inflection happen, that's a great time to own the stock.